Okay. Now in question 1, I hope students can see my screen. I've shared a double screen PDF file and the Word document. Please confirm if you can. Okay, thanks. So this is accounting 1. Let me go back to the paper. This is the paper. It says Bachelor of Commerce in Supply Chain Management. Okay, June 2021, accounting 1. All right. The first question asks you to work out the net asset value of Sibia's General Dealers at 31st March 2021. Okay, you've been given a list of accounts, equipment, inventory, the bank favorable, the trade receivable, accrued expense, and trade payables control. Okay, so the question is, what is the net asset value? All right, so this is another term used to describe, used to define equity. Okay, so I've drawn up a table to help us work out the equity. So if the question doesn't ask you to work out equity, another term that can be used is net asset value. So net asset value is another term used to define equity. Okay. We need to apply the accounting equation, but which variable? If you look at the table on your right, I have equity is equals to assets minus liability. That's another variable of accounting equation. Equity is equals to assets minus liabilities. Okay. So now we're gonna do what I call a classification of accounts. All right. We need to classify these accounts as per their elements. For example, what type of account is equipment? Equipment is an asset. So I'm going to write here equipment to the value of 36,000 rands. 36,000. What type of account is inventory? Inventory is an asset. The value is 108,000. What type of account is bank favorable? And why did they specify that the bank account is favorable? It's because that the bank account can also be unfavorable. If the bank account is favorable, it means that the business has sufficient funds. The business's balance is positive. Okay, I think there's messages. Okay, Tanatswa, I'm not sure about the format, but this one I have created it on my own. So I'm not sure if they will supply an answer book. All right.
Damn.
There's a lot of coming through. Okay, guys, please mute your mics. There's too much background noise. I'm not sure, maybe it's from my side. Okay, now let's continue. Okay, Galaxy A30, I see that you have raised your hand. Okay, in the meantime, we'll continue. So I was saying that the bank account is stated as favorable. Sometimes the bank account can be unfavorable. Okay, so if the bank account is favorable, it means that the business have a positive bank balance. Okay, let me try and mute everyone. Okay. So if the bank account is debited, if the bank account is listed on the debit side, on the left side of the trial balance, it would mean that the bank account is positive. The business's bank balance is positive. So if your bank balance is positive, it means that the money in your bank account belongs to you. So now we can conclude and say that this bank, which is favorable, it's an asset because that amount belongs to the business. And what are assets? The belongings of the business. Okay. So I need you students to take note of this. If the bank account is stated as favorable or is listed on the debit side of the trial balance, then it's classified as an asset. But if it's listed on the right side, on the credit side, then it is a liability. Or if it's stated as unfavorable, then it's a liability. Okay. So now we have bank of how much? 18,000 rands. Okay, I think there's a message. Okay, someone is asking me to repeat. I'm saying that students, this amount, this item of the bank, it has been stated that it's favorable. So now we can conclude and say it's an asset because if the bank account is favorable, it means that the business have sufficient funds. The business's bank account is positive. So if it's positive, if your bank account is positive, it belongs to you and any belongings of the business are classified as assets. Okay. But if it's unfavorable or it's listed on the credit side, then we can say that it's a liability because remember, if you have a negative balance, when you deposit funds, that balance, that amount will be taken by the bank because you are owing the bank that certain amount. Okay, so it does not belong to you, but it belongs to the business. Okay. The next one, the trade receivables is also an asset. What do we mean by trade receivables? We are referring to customers who bought goods on credit. So if you buy goods on credit from any business, then you will belong to that business's books. You will owe that business. Remember, we said that assets are resources controlled by an entity for future economic benefit. So if they sell goods to you on credit, they're expecting future economic benefit from the money that you owe. So trade receivables or debtors control are also classified as assets. Okay, so we have we have 4 assets so far. Okay, what about accrued expenses? What are accrued expense? These are expenses that are outstanding, expenses that are due. If they say to you your school fees is outstanding, it means that you owe Regent Business School. So you need to pay. You are liable to pay. So now we can say that accrued expense can be classified as a liability. Accrued expenses. What is the amount? 12,000. The next one, trade payables is also a liability. What do we mean by trade and other payables? And what's the difference between trade payables and trade receivables? I said that with the receivables is the money that is owed to the business. It represents a summary of debtors' transactions during the month. So if we buy goods on credit from any business, they will record our debts on the debtor's book. So we belong to that business, we owe that business, they're expecting future economic benefit from the money that we owe. But with payables, it's the business that owes other businesses. So it's the money that the business owes other businesses. For example, if the business buys goods on credit, the business will owe its supplier. Now, if you owe someone, you are liable to pay. So trade payables is classified as liabilities because it fits into the criteria of liabilities. Same as the accrued expense. It's all about the money that we owe. Expenses that are due, expenses that needs to be paid. Payable, trade payables, money that needs to be paid, goods that were bought and traded. Okay, so if you check all these definitions, they mean the same thing. That hence why I'm saying they satisfy the recognition criteria of liabilities. Okay. So we have 72,000 rands. Okay, I think there's a message. Trade payable, also known as creditors. Yes, that's true. Trade payables, another word for trade payables is creditors control. Another word for trade receivables is debtors control. Okay, now let us sum up the assets accounts. We have 36,000. Please add for me 36,000 plus 108 plus 18,000 plus 84. Okay. So it's 36 plus 108 plus 18 plus 84,000. Thank you very much. It's 246. 246. That's the sum of our assets, 246,000. What about liabilities? 12,000 plus 72,000, 84,000. Thank you very much. We have 84,000 here. 84,000. Okay, let me just highlight these ones. Okay, now we can apply the accounting equation. Remember, we were looking for the equity, also known as the net asset value. So to work out the equity, we're gonna use this variable, asset minus liabilities. So 246 minus 84,000 rands. Let me check. 162. Thank you very much, students. It's equals to 162. Okay. So I think we should also know all the variables of the accounting equation. What if in the exam, they ask you to work out assets? What if they ask you to work out liabilities? So accounting equation can be expressed as follows. Assets is equals to equity plus liabilities. Equity is equals to assets minus liabilities. Liabilities is equals to assets minus equity. So the value of the assets is a combination, is equivalent to a combination between the equity and liabilities, because we believe that equity and liabilities are financed by assets. Okay, so if you can be bankrupt, if you can become insolvent, they can repossess your assets. Okay. Now, I'm just going to pause and allow students to ask questions. Okay. Okay, there's a question. No question, just a thank you for doing this. Okay, Brenda, you're welcome. Others? Okay, I think so far so good. I think it's clear for everyone. Now let me just do a wrap up for this for students who just joined late. Okay. Now, in this question 1.1 of June 2021, if you do not have the question paper, please send me a WhatsApp message. I will distribute my numbers at the end of the session. Okay, so you were asked to work out the net asset value. I know that some students, most students, are not familiar with the word net asset value. Probably they thought they want assets. Okay, so net asset value is another term that defines equity. So equity and net asset value is one and the same thing. Okay, so the first thing that we did was to group these accounts as per their elements. Okay, but now when you group the accounts, you need to check, you need to do what we call a criterial test. You check if you say equipment is an asset, does it fit into the criteria? Yes, it does. What about inventory? Yes, it does. It belongs to the business. The equipment belongs to the business. The favorable bank balance belongs to the business because the business can have access at any time. Trade receivables belongs to the business. People who owe the business belongs to the business, belongs to the books of the business. Okay, so we are certain about these four accounts since they meet the criteria of assets. Then we moved to the liabilities. We had accrued expenses and trade payables. What are liabilities? The debts of the business. So if they say the business's expenses are accrued, it means that the business owes some expenses. So if you owe, you have a debt, you have a liability. Trade payables, people whom the business owe, okay, such as suppliers. The business is liable to pay its suppliers. Therefore, the trade payables, also known as creditors control, is a liability account. And then we added the total of the assets. As you can see here, we said 36,000 plus 108 plus 18 plus 84, we got 246. The sum of liabilities gave us 84,000. We used this equation. Equity is equals to assets minus liabilities. So 246 minus 84,000 is equals to 162. Okay, if you still have a question, you can just type on the chat box. Now, 1.2, it's almost the same, but with this one, you need to analyze the transactions. Okay, number one says that the owner bought his personal equipment valued at 40,000 into the business. You see, I like this with into the business. The owner is buying for the business. The owner is adding into the business. Already we know that there's something that belongs to the business. We have an asset in that transaction. Okay, so I'm gonna say, okay, I think there's a message. June 2021. So I'm gonna say that since there's something into the business, we need to have a positive 40,000 rands. Positive 40,000 rands. But let's look at this. Who is adding into the business? It's the owner himself. The owner is buying equipment for the business. Now, the owner's contribution into the business increases. He is adding value into the business. Okay. All right. What about liabilities? Are we owing anyone? No, we're not owing anyone. Now, this is crucial. Which account should be debited and which account should be credited and why? Okay, I would say that equipment will be debited since we said that there will be a positive 40,000 that should fall under assets. Okay, so equipment will be debited because assets increase on the debit side. So if we decide to buy assets, assets should be recorded on the debit side once they are purchased. Okay. Now, Which other account should be affected in this transaction? It should be a capital. What is capital? Any contribution made by the owner into the business. Okay, so if the owner contributes into the business, we will classify that transaction as capital. The owner is adding equipment into the business. The owner's contribution into the business increases. So it also makes sense because if you look at this equation, it balances. Why? Assets equals to equity plus liabilities. So if we say that 40,000 is equals to 40,000 plus 0, the equation balances. Okay. So if you're not sure about the effect on the accounting equation, just check if your equation balances. All right. So with this one, we are 100% sure that everything was done absolutely correct because we have on the debit side 40,000, on the credit side we have 40,000. The double entry system, the accounting equation balances. Okay, I think we have messages. Okay. Thank you very much. That's correct. So this was number one. Before I move to number two, I just want to make sure if we are all on the same page. If you are confused, if you are lost, you can just type a question. Okay. In the meantime, I'll carry on. Number two, sold goods to K. Chetty for 15,000 on credit. The business sold goods to a client for 15,000 on credit. This is crucial, on credit. On credit. The business sold goods on credit. Now, if you're selling your asset, remember, those goods belongs to who? They belong to the business. So if we decide to sell them, what will happen to our assets? If you decide to sell 2 pairs of your shoes, what will happen to the number of shoes that you have? Definitely decrease. Shoes are your assets. If you decide to sell them, you will lose your assets. So it's the same here. The business is losing goods worth 15,000 rands. Okay. At the same time, a debt has been created. A debt has been created because the business sold goods to this client. This client will owe the business. This client will be classified as an asset of the business since the business will expect future economic benefit. Okay, so they don't just sell goods for fun on credit. They're expecting future economic benefit. They're expecting that you will pay in future. Therefore, trade receivables increases with 15,000 rand. Any effect on the equity? Okay, I think. Okay, let me start here. I'm currently okay. Network issues. All right. I just want to make Susie a co-host so that she can assist with muting a student. Just give me a sec. Let me just pause. Okay, Susie, I've made you a co-host. Now you can help me mute students. Okay, now let me continue with this transaction. Okay, Now, I think I've missed a point here because now the information says that the business uses periodic inventory system. Therefore, I do not need to show the effect of the trading inventory. Remember, under the periodic inventory system, we do not need to show the cost of sales in each sale. Okay. So because the business uses periodic inventory system, the transaction will look like this. We'll have 15,000. Remember, we have debtors who owe us 15,000. And then we have sales worth 15,000. Okay. So students, if the business uses the periodic inventory system, it means that you'll have two accounts on every sale. But if the business uses the perpetual inventory system, then you'll need to show the effect of the trading stock. Just like I was explaining when I started explaining transaction number 2, I said that the business sold goods, the business lost the value of 15,000. Okay. But now because this business uses the periodic inventory system, we will just show the effect of the trade receivables and the sales. So which account will be debited? Trade receivables will be debited or debtors control. Let me use debtors control. Debtors control will be affected. People who owe the business will increase because one of the clients bought goods on credit. The business sold goods to KHT on credit. Okay. So now we have sales. What is sales all about and why is sales credited? Okay, let me explain, then I will look at the messages. I'm 100% sure that students understand why I said debtors control will be debited. It's because that debtors control is an asset. People who owe the business will increase in terms of number. Okay, we fine. What about sales? Sales represent the number of goods sold, the amount of goods sold during the year. Sales is an income account and income accounts increase on the credit side. So if our sales increases, we need to make a record. We need to make an entry on the credit side. Sales is an income account and all income account increase on the credit side. So if we look at the equation, it balances. Now let me go to the messages. Okay, the first one, where can I get the recording of the lesson? All right. Okay, with Keston, you will text me on my number. Let me just send my number here, 076-729-7208. Okay, so I will send the recording to everyone. Now, let me check. Can we just write debtors and the name of the client? Yes, that's correct. You can also do that. Number 2, Humutso, am I the only one who can hear? Guys, can you hear me? Okay, Cabello says yes, yes. Okay, someone says I should repeat my number. It's 076-076-729. Oh, I've sent to this person. I should send to everyone. 729-7208. Just send me a WhatsApp message. Then after I've converted the recording, I will share to everyone. Okay, thanks, Brenda. Maybe Humutso, the problem is on your side because most students can hear me. Okay, so students, please take note that if you see a transaction that says sold, sales account should be affected. But now you need to be careful. You need to look at what is written on the information. Okay, do not make the mistake I made. because I did not see this one. The business uses the periodic inventory system. If the business uses the periodic inventory system, as per this system, no need to show the cost of sales, no need to show the value of the inventory that was sold. It will be shown at the end of the year. Okay, hence why we'll have two accounts, the debtors control and the sales account. Okay, let me check. All right. If you have a question on transaction number 2, you can just type. In the meantime, I'll move to transaction number 3. Where you type one example for perpetual inventory system. Okay. Now, if the business uses a perpetual inventory system, they will give you what we call a markup on cost. Okay, a markup on cost is a percentage that the business use on its cost price. Okay, say for example, you bought goods for 5,000 and your markup is 50%. What does that mean? It means that you will never sell these goods for 5,000, but you will add this markup. You will add 50% before you sell. So what is 50% of 5,000 is 2,500. So your sales will be how much? 7,500. Okay. So now with the perpetual inventory system, first you need to show the cost of the goods you sold. You will show 5,000 separately. You will also show 7.5 separately. That's the meaning of the perpetual inventory system. That's an example of perpetual inventory system when recording the sale of goods. Okay. So if it's the perpetual inventory system, which accounts will it be? Okay, I think we need to take this into consideration. We need to take this into practice so that students can understand. If it was a perpetual inventory system, you would have something like a markup on cost. I hope students can see my screen. This is an example where markup on cost is 50%. Okay, this is a transaction says that sold goods to Janelle for 7,500. This is an example of a transaction under the perpetual inventory system. Okay. Now, how do we record the accounts that are affected in this transaction? Number one, you need to debit. Say, for example, these goods were bought on credit, were sold on credit. Okay. You debit the debtors control with the selling price, 7.5. Credit sales, 7.5. And then debit inventory, 5,000. Where did I get 5,000? Remember, students, when I was making an example about this scenario, I said that the cost price is 5,000. Okay, so if you say 7.5 times 100 divided by 150, it would give you 5,000. That's the cost price. Credit, sorry, you're not going to debit inventory. Debit the cost of sales. Cost of sales. How much did these goods cost? They cost 5,000. And then credit inventory, 5,000. Okay, So cost of sales, it's just an expense that we use as a contra account for the inventory when goods were sold under the perpetual inventory system. And then with inventory, remember that we are losing inventory that is worth 5,000. And inventory is an asset. Assets decrease on the credit side. So students, if the business uses the perpetual inventory system, number one, you should expect a markup. If a markup is not given, then the transaction would give you the cost price and the selling price. Where do I record the cost price and the selling price? Under sales and debtors control or bank, if goods were sold for cash, you will record the selling price. Okay. So on this one, you only record the selling price. And then here you record the cost price. What was the cost price of these goods sold to Jana? They cost the business 5,000 and they were sold for 7.5. Remember, I said that you can never sell goods for the exact price you bought them for. So it does not make sense. Remember, the aim of the business is to make profit. So how do you make profit if you are selling goods for their very original cost price? Okay. So in conclusion, once you see the word perpetual inventory system, then you need to identify 4 accounts. One being debtors control or bank if goods were sold for cash. 2, sales. 3, cost of sales. 4, inventory. Okay. We have one message. Okay, I hope students, you are answered. If not, please let me know so I can start again. Okay. You can just type your question if you're still confused. Okay. Now let's carry on. Sorry. Okay, we share screen. Where's my screen now? Okay. All right. I think I have some technical issues. Let me just solve now. Okay. All right. I hope students can see my screen again. We are on transaction number 3. It says that paid 6,800 from the business bank account for medical expenses incurred by the owner's wife. Okay, now let's focus on this statement, incurred by the owner's wife. We are taking out money from the business's bank account to pay for the owner's medical expense. So this one is different. This one is an opposite of the first transaction. Let's look at the first transaction. The first transaction says that the owner brought his equipment into the business. The owner is contributing into the business. The owner is adding value into the business. But with number 3, the owner takes from the business since the medical expenses of his wife was paid from the business's bank account. What does this tell? It means that equity should decrease because the owner is taking from the business. Okay, now 6.8 will affect the business's bank account. So it's a minus 6.8 because the business bank account will decrease by 6.8. Okay, what makes me say it will decrease? Because of the word paid. Okay. Yes, Nompumelelo, it's withdrawal of money. It's a withdrawal of money. Thank you very much. Are we owing anyone? No, no liabilities involved. Zero. Debit side, okay. What is the opposite of capital? It's drawings. If capital is credited, it means that drawings should be debited. It makes sense because equity increase on the credit side, equity decrease on the debit side. So if the owner takes from the business, we will record, we'll make an entry on the debit side. So drawings will be affected. Okay. Yes, Tanatwa. Yes, Galaxy Note 20. The bank will be credited since the bank will decrease by this amount of 6.8. Bank is an asset. Assets decrease on the credit side. Okay. Does the equation balances? Yes, it does, because if you look at the debit side, assets is equals to 6.8, equity plus liability is equals to 6.8 as well. If you say minus 6.8 plus 0, it will give you minus 6.8. This side, it's minus 6.8, and that side, 6.8. So the equation balances. So students, it is very important to test your equation. If you're not sure about the effect on the accounting equation, just check if your equation will balance. Okay, let me check. All right. Even if you can use brackets, but a negative sign means it's a decrease. So a negative sign and brackets, I think they mean the same thing, if I'm not mistaken. Please correct me. But if you prefer to use brackets, okay, use plus for increase in value and minus or brackets. Okay, you see, we have an option. We can use minus or we can use brackets. Okay. All right, thank you very much. Now, allow me to move on to the next one if everything is clear. If not, you can just type. Number 4, Masilela has an account with a balance of 5,000 with trade suppliers, which is 7 months old overdue at 30 April 2021. Paid interest, which is charged at 12% per year. Okay, who is Masilela? The name of the business. So this business has an account with another supplier, and this account is due with 7 months. And the supplier charges an interest of 12%. How do we work out the interest expense? How do we work out the interest that is charged by the supplier? So this is what we need to do, students. We're going to say 5,000 multiplied by 7 months, divide by the total number of months, multiply by 12%. Okay, 12%. 5,000 times 7 divides 12 times 12% is equals to 350. Okay, let me check the messages. Yes, thank you very much. 350 will be the interest that will be charged by the supplier. If your account is overdue, you will be charged an interest. Now, the question is, what will happen to your account? What will happen to the money that you owe your creditor? It will definitely increase. So already we know that the debt of the business will increase by 850. Debt of the business will increase. Sorry, I think I'm talking rubbish. Okay, because this one says that paid interest. Okay, this interest was paid already. Okay, if it was paid, the bank account should be affected because it's the business that owes the supplier. So it should be minus 350 and minus 350 under equity. Why do I say under equity? Because we have an account called interest expense. What type of account is interest expense? It's an expense account. So remember that all expenses affect equity. Okay, so we have 4 accounts under equity. We have capital, we have drawings, we have income, we have expenses. 4 accounts under equity: income, expense, drawings, capital. Any effect under liabilities, it's a 0. Which account will be debited? It's an interest expense. Which account will be credited? It's bank, because of what? The last statement says that paid the interest. Paid interest, which is charged at 12% per annum. So the interest has already been paid for. Hence why the bank account will be affected. Okay. There's a lot of messages. Bank will decrease expense. Yes. Thank you very much. I see we have a lot of genius in this group. Okay. Okay. I'm so impressed. Any questions, students? Okay, let's look at the last one. Masilela donated goods valued at 3,000 to the local community center. Okay, now let's look at number 2. If you sell goods, if you donate goods, what will happen to the number of goods that you have? Definitely decrease. What does this tell? It means that the assets will decrease since the business donated its goods. So it's minus 3,000 here. Okay, number 5, minus 3,000. Which other account is affected? Donations is affected. Donations is classified as an expense. Okay. Donations is classified as an expense. Minus 3,000, and it's 0 under liabilities. Okay, I think there's a message. Yes, donations will be debited, same as the expense, as the interest expense. Once you see an expense in a transaction, please make an entry on the debit side. Once you see an expense in a transaction, please make an entry on the debit side. So donations, thank you very much, will be affected. Now, what is it that was donated to the local community center? Goods. What do we call goods in accounting? Inventory. Okay. Does the equation balances? Yes, it does balance. If you look at assets, they equal to minus 3,000. Equity and liabilities, it's also the same value. Okay. So students, I'm going to advise you that when you do the accounting equation, number one, you need to know the elements, you need to know the classification of accounts. If you see that donations is involved in this transaction, you should know what type of account is donations. Now, remember, as per the duality concept principle, what you do on the debit should also be done on the credit side. We debited 3,000 here. We also need to credit 3,000 minus 3,000. Okay. It should be two or more accounts involved in a transaction. It can never be one account that can be affected. It should be two or more. That is as per the double entry system. Two or more accounts should be affected in a transaction. Okay, your time is up. Thank you for attending today's free session. We have another free session tomorrow. I'll update you in terms of the time. It should be 7 or 8. Okay, so those who need the recording, please text me on my number 076-729-7208. Let me just write again. Everyone. So guys, I will add you on the group so that all updates will be posted. 07729 076 729 7208. Oh, I think I forgot my number. How is that possible? Okay. So if you do a lot of accounting, yes, it's possible to forget even your ID number. So please don't study too much of accounting. Okay, you'll go mad. I had students who would call me during midnight. Some said debit, credit, debit, credit, debit, credit. So please, students, please do not overstudy accounting. Please study smart. All right. Yes, I need those reviews. Even if this was not helpful to you, you can just say, you know what, say, you've been talking rubbish throughout the whole lesson. I think you are boring. That's fine. Okay. All right. Okay. Okay. Don't forget to text me. I'll add you on the group. Let me stop recording. Stop.